Hello everyone, welcome back. My name is Arias, and today we're going to be going through Natera, but through the lens of an Invitae investor. We will talk about what Natera does, how they compete with Invitae, and review all of the recent lawsuits between the two. Without further ado, let's get right into it. Let's start by understanding what exactly Natera does. Natera characterizes themselves as a molecular diagnostics company, and they are currently drawing most of the revenue from serving women's health. One of their main products is their non-invasive prenatal test, or NIPT, which they call Panorama. They launched Panorama in 2013, and it's become the largest NIPT test in the world by unit volume. Like other NIPTs, it screens for fetal abnormalities with just a blood draw from the mother, a massive improvement over previous methods that were either unreliable or very invasive and carried additional risk from miscarriage. Panorama is also the only NIPT currently available that can differentiate between twins, which, while twins only occur in about 3% of births, still sets Natera's product apart. Moving on, they launched their carrier screening test, Horizon, in 2012, a year earlier than Panorama. This assesses the risk for a couple of having a child with greater risk of genetic conditions. These conditions are often rare and have no family history, which is important for the utility. Both of these tests have been shown to be tremendously accurate and make up a majority of Natera's revenue on their own. Moving on to some of their less commonly utilized tests currently available, with the first being Vistara, a NIPT test that still uses a maternal blood draw, but tests for 25 single-gene disorders with a combined incidence of 1 in 600. This is similar to their flagship Panorama NIPT, but targets new single-gene mutations, whereas Panorama looks for microdeletions and missing chromosomes. Regular NIPT, prenatal ultrasounds, and family history are all unreliable indicators of these disorders, increasing the utility of Vistara. It can even be done with the same blood draw taken for a Panorama test, which makes it more convenient for mothers. Next up is Spectrum, which is a test for couples undergoing IVF and selects the healthiest embryos for implantation, thereby improving the rate of successful pregnancy. As long as that's all they're doing, it seems to be okay to me, but you can get into some pretty murky waters fast if they are not careful. Next, Anora analyzes miscarriage tissue to determine if chromosomal issues were the reason for loss. This can help couples better understand the chances of future miscarriage. Finally, for the women's health side, is Empower. Empower is a hereditary cancer screen for genes associated with breast, ovarian, endometrial, or colorectal cancers. Results of this test can inform future testing. For example, if the test shows that the patient is at an elevated risk, they can increase the surveillance testing frequency, perhaps even using some of Natera's oncology products. Speaking of oncology, Signatera is Natera's MRD offering. This MRD offering seems to be very similar to Invitae's PCM offering. It uses ctDNA to detect and then assess how much cancer is in the body, and this can allow doctors to detect cancer relapse earlier. It tracks the presence of specific mutations of the cancer for each individual patient. Breaking it down to its core, this means that Natera will be able to use a blood draw from a patient to give advanced warning on relapse. This sounds eerily similar to the technology Invitae is offering, and we'll talk about this more when we get to the lawsuits portion. Signatera seems to be poised for massive growth going forward in its competition with Invitae, as it appears to be an incredibly useful test that can ultimately save lives. Their other oncology test is a tissue-based genomic profiling test to help select the best treatment based on patients' genomic alterations and other biomarkers. Moving on from oncology to their organ-focused tests, starting with Prospera. Prospera assesses organ rejection for patients receiving heart, kidney, or lung transplants. It does this by monitoring the amount of donor-derived cell-free DNA in the recipient's blood, with a spike indicating rejection or damage to the transplant organ. This is a massive improvement over invasive biopsies or other inaccurate methods like serum creatinine for kidney transplants. Prospera looks to be poised for massive adoption and what the company estimates is a $3 billion market for this service. The other organ-focused test is Renasight, which determines if there's genetic cause for chronic kidney disease or increased risk due to family history. Overall, Natera has built a very solid business thus far, in my opinion. The women's health business is very broad and helpful to their patients. It provides a solid base of cash flow to fund development of additional products, and the breadth shows that they can innovate and grow their offerings building around a core area. This is an extremely important element for a business at its core, as they should generate value by creating new products and services to better serve their customers. Natera has clearly done that, and another example of this is their organ testing business, which utilizes their core expertise to expand their total addressable market by providing massively useful tests to patients. Most of all, their oncology business appears to be poised for massive growth. It will save lives with earlier detection and improved treatments, and I will be interested to see how quickly this expands going forward. Let's move on from their business to their financials. They guided for approximately $1 billion in 2023 revenue, which represents 25% growth year over year. This is excellent growth in this tough environment, and analysts are expecting another 25% in 2024, according to Yahoo Finance, which is again excellent growth. They have very solid gross margins as well, guiding for 41 to 44% gross margins for the year 2023, although this is a slight decline year over year. They are projecting cash burn of $300 to $325 million, which is a reduction of $150 million from 2022. They ended 2022 with roughly $900 million in cash and $361 million in debt. That's a decent capital position, especially when you factor in the market cap of $5.7 billion, which should enable them to raise a decent amount of money, even in these market conditions. Their financial position is solid for now, as long as the core business continues to grow and maintains their current gross margin levels. Compared to Invitae, their capital position is vastly superior. Invitae has over $1 billion in debt, significantly less cash, half of the revenue, and is only burning $75 to $50 million less per year. Considering all of that, it starts to make more sense that Natera's market cap is 20 times higher than Invitae's. The question for Natera now becomes, do their future prospects justify their current valuation enough for investors to dive in at current levels? To help us figure that out, I've created a very simple model for Natera. If we assume they average 20% revenue growth every year for the next 10, and that gross margins stabilize around 40%, that would imply 2028 revenue of $2.4 billion and gross profit of $1 billion, and 2033 revenue of $6.2 billion and gross profit around $2.5 billion. If we model expense growth at 7.5% year over year, that would imply 2028 expenses of $1.1 billion and an operating loss of $100 million, and 2023 expenses of $1.4 billion and an operating profit of $1.1 billion. If we then value them on their 2033 operating profit of $1.1 billion by assuming a 30 price-to-earnings ratio, that would imply a value of $33 billion, a 5 times increase from today's levels, or 19% compound annual growth rate. That's a very reasonable return, but is largely dependent on whether you think that they can grow 20% year over year on average for the next decade. It's also worth saying that I think they'd have to raise capital or pull forward growth or push out expenses to avoid bankruptcy with these assumptions. Another variation of this model could be if you increase revenue and expenses growth slightly to 25 and 10% respectively. That could easily yield a valuation in excess of $50 billion, which would bring a total return up to 9x or 24% CAGR. That would be a stellar return, but hinges on their long-term growth rate. At first glance, it appears to me that they can keep growing at these rates with huge underserved markets to grow in, with this being especially true in oncology. However, I will need to do more research into Natera's position specifically to see how much they can expect to take from these markets. Now let's shift our focus from exclusively being on Natera to include Invitae and discuss where the two go head-to-head and where they diverge. Natera doesn't face competition from Invitae in many of their businesses, including NIPT for de novo single-gene mutations, transplant organ rejection testing, miscarriage analysis, and IVF implantation testing. Transplant organ rejection testing in particular, I could see becoming a very significant business for Natera, but overall, I'm not disappointed with Invitae for not competing in these verticals. Invitae doesn't compete with Natera in rare disease testing, as well as broad hereditary testing, and with their data business. When compared in this way, I prefer Invitae's collection of other businesses. The DTC hereditary testing business is already massive. Rare disease has the opportunity to expand dramatically and help so many people in the process. And the data business has the opportunity for scalable software-like margins. But the two do compete in two primary places, being NIPT, where Natera is significantly larger than Invitae, and MRD and PCM, where Invitae may have a strong foothold, but they may not be able to keep it for much longer with the status of the lawsuits between the two companies. While NIPT is a solid business for Invitae, it's not truly part of the core, and it's such a large, underserved market that there's plenty of room for the both of them to grow, and this doesn't worry me for either company. The oncology business, on the other hand, has become a major source of concern for me. This is because I thought Invitae's technology was somewhat unique and differentiated, allowing them some advantages in the adoption of these revolutionary tests. However, it appears that might not be the case, as Natera has recently enjoyed significant victories against Invitae in court that may hinder Invitae's ability to be successful with these oncology tests going forward. Starting from the beginning of these lawsuits, Natera first sued ArcherDX in 2020 over a few of their patents, and in the same year, Invitae bought Archer. Last year, Invitae sued Natera over some additional patents used in PCM sequence assembly, but I have not seen a resolution from that case. However, in Natera's first case against Invitae, a jury found Invitae guilty of infringing on 3 of Natera's patents related to PCM and MRD. They were awarded $19 million in lost profits and royalties and are now seeking to stop sales of Invitae's products that utilize these patents. The courts rejected Invitae's appeal, leaving them in a tough spot going forward with their oncology business. This is a massive decision for Invitae, as PCM is very important to their future. PCM and its potential in both helping patients and creating a data flywheel is almost 75% of why I own Invitae's underlying business. I'm going to be putting a lot of consideration into if I want to own this business if it's not going to have PCM as part of its future. I will be also monitoring the situation closely to see if Invitae's lawsuits against Natera find any success, and then we can evaluate what those will have on the space. This will be an even further reason to pay close attention to Invitae's earnings this quarter, as management should provide some clarity on the situation in their first opportunity for live comments. If you made it this far and enjoyed this video, check out my full Invitae playlist as the first link in the description. Thank you for watching and have a great rest of your day.